Oh, my lands, here we are again with another show. I'm so excited to have you tune in and listen in. Listen, my name is Jay Connor, also known as the Private Money Authority. And if you are new to the show, I must tell you, I have just amazing guests come here on the show with me. And today is absolutely no exception. My guest, listen to this, just within 12 months of being in business, sold 61 homes worth over $30 million. Now, he's a real estate investor as well, and we're going to be diving deep on the real estate investing side of the business. But before we get started, I also want to let you know that my guest is a military veteran who attended the United States Military Academy at West Point. That was from 2013 to 2017. And he played football, graduated with a degree in business management. So, in addition to that, during his time serving as an officer in the Army, he had to gain the trust of many different kinds of individuals to be effective at his job. Now, today, he draws upon that experience when he works with his real estate clients. And he's dedicated to being transparent, honest, and encouraging each step of the way. In addition to helping his clients, with their real estate endeavors, my guest also invests in real estate. As I said, he got started back in 2018 with rental properties, and now he's a flipper, just like me. So with that, welcome to the show, my friend, Gervon Simon. Hello, Gervon.
Hey, Jay. Thank you for having me. I appreciate it.
Absolutely, Gervon. You've got an amazing story, and I'm so excited to have you here on the show. And you're located in Tacoma, right?
Yes, sir. So I'm based out of Tacoma, Washington, serve Seattle, Tacoma, and Olympia. Basically the surrounding areas of Joint Base Lewis McChord.
Gotcha. Now, you have a real estate company that buys and sells homes. So just to make sure it's clear for everybody, those when you first started in the business, those 61 homes you sold, was that on the side of the business as you having a realty company?
Yeah. So that was more so me as an agent, and those were home sales that myself and my team were able to sell in a 12-month period. Last year really. So 2020, I actually sold 61 homes myself as a solo agent, and then in 2021 we did almost the same exact production, but about 6 or 7 million more in volume as a team. And so this year we're on pace to surpass all those numbers. So growing and going in the right direction, and that's pretty much my day to day is selling homes, running a real estate team, helping people buy and sell real estate.
Right, right. Well, you're a rare breed there, Javon. I mean, you're a real estate agent. You help people sell their homes, buy their homes, and you're also a real estate investor. The majority of realtors that I know are not on the investing side like you are as well. Why do you think most realtors don't get into investing themselves?
To be honest, I think they get into being real estate agents for the money. I don't think they get
Hmm.
into real estate for to help people, and I don't think they get into real estate to build wealth. I think they just get in it to get the money. I've made successful amount of money as a real estate agent, right? But when it comes down to what's really grown my wealth the most, it's hands down been investing. The
Exactly.
properties that I own have allowed me to be in a financial position that most people my age aren't in, and most agents aren't in. I've surpassed a lot of agents, and I'm not saying that in a cocky way in any means. Not just on the sales side, but also in terms of my portfolio, my wealth, all that stuff. Just because, I came into this all encompassing. I learned about real estate because of investing. And then I had just happened to get my real estate license because I also was looking for a new career, and I was good with people, and I knew real estate so well, so it just made a lot of sense.
So, what got you into real estate?
When I was a junior towards the end of my junior year at West Point, I was on an email chain of a bunch of cadets at the time, we were meeting and talking and, collaborating, sharing ideas of different ways to learn about, financial literacy, really, which I knew nothing about. I come from the poorest city in Pennsylvania, born and raised. So I didn't nobody taught me any of this. So whenever someone had mentioned some videos or sent links to some YouTube videos, and in those videos they were talking about the book Rich Dad Poor Dad, and went over a lot of the concepts. So I went and read the book. I got hooked on it, and I decided, you know what, I'm going to go ahead and go all in on this. And this is this is what I've been looking for. This is the direction that I want to go. And so my senior year, I spent a lot of time focusing in on real estate investing.
That's awesome. Well, Gervon, one of the topics that you love to talk about actually happens to be my favorite subject, and that is how to get funding for your deals without using any of your own cash, any of your own credit. So, how do you go about that?
Yeah, at this point, I'm pretty well established with my private money lender. And it took some time to get to that point. I went through a lot of hard money loan companies, and the company, my private money lender is pretty much a hard money loan company. But they're a little bit more intimate. They don't have a whole lot of overlays. They have their own way of underwriting deals, and on a national level without using appraisers. So, they're able to close pretty quickly and give me an answer usually within 12 hours of what they can do for a deal. So, long story short, I've just built up a great reputation, and I honestly got lucky and stumbled upon a great private money lending company that works almost strictly with veterans. And it's been a fun ride with them, and they've helped me. I've helped them, and together it's been a mutually beneficial relationship.
Yeah, well, that's awesome. Yeah, Gervon, I got started raising and attracting private money from individuals, not
Okay.
institutions,
Yep.
not banks, not hard money lenders. Back in 2009,
Wow.
2003 to 2009, I relied on banks and institutions, and then in 2009, like all the other real estate investors in the nation, I lost my lines of credit. So I knew I had to find a better and quicker way to fund my deals. And
Okay.
so I was blessed to be able to raise a little over $2 million from individuals in less than 90 days when I lost my lines of credit. So, Gervon, if you don't mind, I'll take about 20 seconds. I got a free gift to give away. And that is, I just finished writing this brand new guide. It's called 7 Reasons Why Private Money Will Skyrocket Your Real Estate Business and Help You Build Incredible Wealth. And you can download it for free at jayconner.com. That's JAYCONNER.com/money guide. Again, that's jayconner.com, JAYCONNER.com/money guide. And this will get you on the fast track to getting private money, lots of it. And in this world, you get to make the rules. So download this for sure and take advantage of it. So, Gervon, I mean, here you have got an amazing story. I mean, you became a millionaire at the age of only 28 years old, and you did it in under 3 years. So, what are the components? I mean, how did you, in less than 3 years, become a millionaire at such, relatively speaking, a young age?
Honestly, I was drinking the Kool-Aid I was preaching to my clients, and that I've been telling people for years. Especially veterans in active duty military. You have a VA loan at your benefit. And just like you do, you purchase property without anybody else's money all the time, right? So it's the same thing with the VA loan. Except for I'm buying retail properties. I may not be getting great margins up front, but whenever the market appreciates like it has since 2019. I mean, we're at a point now where it's but me being able to purchase a property from two properties within 11 months in Tacoma, Washington, before this crazy market took off, before COVID, is really it's perfect timing. It's God's timing. It's not necessarily that I did anything great other than I just stayed the course. If it would have taken me till I was 30, maybe 35, for me doing the same thing, I wouldn't have done anything differently. It was just the simple fact that I was able to, that I got blessed in terms of my timing. But I also did exactly what I tell people to do. So this is what, year 4 since I bought my first house, or no, third year, because I bought my first house in Tacoma in 2019. And so I'm going to buy another house here in a few months, just with my VA loan. That's aside from the flips. That's aside from everything else I'm doing. And I've also, I've started to do the Burr strategy and stuff like that as well, just because I need to scale a little bit quicker in terms of, or I'm able to scale a little bit quicker in terms of, building a portfolio, building wealth, getting deals with margin because I understand it so well. So that's another portion of it. But for the most part, using primary resident mortgages to purchase a property, live in it for about 12 months, sometimes less, sometimes more, and then turning that into a rental property and moving on to the next. That's the easiest and best way to build a portfolio that almost nobody does. And the people who do it, they're extremely successful. Every single person I've helped do that, they've, multiplied their net worth hundreds of thousands of dollars because they were able to do it. And then they also have passive income. You make money in real estate from 4 different ways. Obviously appreciation, debt buy down, cash flow, and your tax advantage. Sorry, I had to think about the fourth one for a second. And so that's really how I did it. I think it's pretty simple, honestly.
Right. Now, you mentioned a moment ago perfecting and utilizing what we call the Burr method, which is spelled B as in boy, R. How about explain what the Burr method is?
You buy, rehab, renovate, rent, and refinance. And so basically, and to simplify it even more, is you buy a property with margin. That would be a flip. You buy a flip, and you run your initial numbers. And if you have enough margin to do a cash out refinance of 75% loan to value after it's all said and done, and you have enough margin to do that, after you renovate it and put a tenant in there, you can go refinance the property, pull some, all, or maybe even no money out. But now you have a cash loan rental with equity. So when you purchase a property, your net worth shoots up instantly because you're buying with margin. So instead of flipping a home, you hold on to it and you hold it on to it as a rental. Now I'm in a market where it doesn't always make sense to do that. I've had plenty of flips that if I went to do this, I would have tried to rent it out and I'd be, barely making $100 a month. And it doesn't make sense. I'd take the equity and roll it into another deal. However, whenever it comes to, there are some times and a lot of times where you can purchase properties with good enough margin. I just bought a duplex in January. I'm finishing up the rehab and putting furniture in it this week. The rehab's like 97% done. I'm putting furniture into it this week, and I'm renting it out to travel nurses. And then, once I hit the 6-month mark, I'm going to refinance right out of my hard money loan and into a 30-month mortgage, 30-year
That's
mortgage.
awesome.
Sorry.
Yeah, I got you. So I want to go ahead and put it out for anyone that wants to connect with you. Your website is www.thegqhometeam.com, thegqhometeam.com. So Gervon, pretty much across the nation, there's no inventory in the multiple listing service. If you are like myself, all the real estate deals that we're finding now are what we call off market. They're not listed in the multiple listing service. These are for sale by owners that we market to. Well, one thing that you've gotten really good at is how to find and get the best deals before your competition does. So, so please share, how do you get the best deals before your competition?
Honestly, I have an incredible advantage. I'm a realtor. I know the market better than 90% of the population. And I know it intimately. So whenever I get a deal that crosses my desk, you can tell me an address in Tacoma, you can tell me the size of the home. And if I get a deal from a wholesaler or I know somebody who wants to sell off market, I can tell you almost instantly what the house is gonna likely sell for, just because I know the market so well. Even investors, they don't really understand the market. A lot of investors don't understand the market as well as I do, because I'm practicing it day in and day out. When other investors, if even if you're flipping houses or whatever, and most people are only going to flip a few houses a year. I'm selling over 60 houses a year, so every month I'm selling on average 5 homes a month at least. So with that being said, I'm able to constantly see the changes. I see the neighborhoods that are going up or going down. So when I get a deal that comes across my desk, I jump on it. Case in point, even appraisers. Case in point, the duplex I told you about, it was my next door neighbor for over a year. I lived in the house next door. I bought it with my VA loan. Talked to the neighbor. The neighbor was a tenant who told me, "Hey, I'm moving. My uncle has dementia. His uncle was the one who owned the house, and they're going through a guardianship. The house appraised for $350,000. And he said, I think they're crazy. I can't believe they want $350,000 for this house." And I said, "They want how much?" I said, "Can you please pass me along the information to the guardian?" She passed it along. I had it under contract, and I closed, because I knew that house on market will sell for over $600,000.
Woo! That weren't a bad day's work, was it?
It wasn't. Now it costs a lot of money to renovate, but that's another story.
I understand. I
Yeah.
understand, Gervon. Well, that's fantastic. So really, you're finding those deals because you're actually in the market yourself. You said something a moment ago that I found interesting. I'd like to dive in a little bit, and
Sure.
that is, you said that veterans are able to use and get VA loans,
Hmm.
and so how many multiple VA loans can a veteran have at any given time?
There's no limit on the number of VA loans that somebody can have in their name. The only limit is whenever you own one or more homes with your VA loan, based on the county that you're in or that you're trying to purchase in, they have a VA county loan limit. So, for example, most of the country in normal counties, they have a $647,000 VA home loan limit. So, if the average price point is $150,000, and the lowest of any county is 647 for this year. So, and you can purchase every year over and over and over again, zero down, after you live in a home that you purchase with your VA home loan, up to that point. And once you exceed that point, or you go to purchase a home, and the price exceeds or puts you over that county loan limit, you just have to put 25% down of the difference. So let's say you have $100,000 in equity, or an entitlement. I'm sorry, and you want to go purchase a home for $200,000. You just put $25,000 down. You have $100,000 of entitlement. The purchase price is $200,000. You pay 25% of the difference, what comes out to $25,000. And so people utilize that strategy all the time. I utilized it at the time when I bought. I had $455,000 in entitlement, and I used all of it on my second purchase. I've just refinanced the first house I purchased, and since the county limit has shot up so much in my county, it's 891,000, because we're in a higher, more expensive place to live. I now have enough equity to go and purchase another property with my VA loan. And yet, that's retail. Like I said, I'm not getting a whole lot of margin, but at the end of the day, I'm still adding. It's an asset regardless.
Absolutely, absolutely. Um, Gervon, that is so interesting. And any veteran that is interested in real estate investing, um, my guess is the majority of them don't know about that, or don't know about that
Hmm.
strategy. So they would
Hmm.
definitely want to reach out to you. When you started real estate investing, Gervon, what were some of your early struggles and lessons learned?
Um, Nothing ever goes according to budget, according to your projections, and according to plan, ever. I've never had a deal that went 100% according to plan that I didn't have any budget increase whatsoever. And in every single time that I have my ARV projections and all that stuff, almost every single time, when I plug everything into my calculator, I always have myself making a little bit more than I really do, which is okay, and that's why I have a process and I make sure that I have enough margin to purchase. Otherwise, I'll just say no. So I'd say that on top of learn when to say no, especially if you're investing, especially if you're flipping, learn when to say no. If it doesn't feel right, if it's tight, don't do it just so that you can quote unquote get experience. It's the worst decision you can make. You can lose tens of thousands of dollars doing so.
Yeah, I one of my mantras,
Hmm.
particularly for new real estate investors, is don't let your emotions make any decisions in this business. My experience is the math makes the decision. The math makes the decision.
Hmm.
What's your criteria for your margins? I know you're saying you're not getting large margins, but you're building your asset base. What's your criteria on that's a yes and that's a no?
Well, to clarify, when I said I'm not getting margin, I mean more so whenever I'm purchasing property with like VA loans and on market deals. When I'm flipping, I have to get margins. Otherwise, it's literally just not possible. I'm just going to be losing money. So, yeah. With that being said, I mean, I'm not going to look at a flip if I don't project myself to make at least $50,000. And at this point, I think it'd have to be over. And the reason why I say that is because there's so much competition, and the market I'm in is uniquely educated sellers, especially of what's going on in the market. I believe we're in Silicon Valley 2.0, uh, and and so people understand what the properties are worth, or they have an idea. And so a lot of times it's hard to get deals. So what I'm actually looking at doing next is getting into to ground up development of some sorts, whether it's spec building, whether well, I'd like to get small multifamily, but it's a higher cost, and so I'm just trying to navigate that right now. But hopefully by the end of the year, I'll be able to pull the trigger on my first development purchase.
Okay, well, I was going to ask what's next in your investment career. So is that what it
Hmm.
is?
Yes, sir. Yes, sir.
Awesome, awesome. So I know you can relate to this question because it hasn't been that many years ago, but what's the best advice you would like to offer to a brand new real estate investor looking to do their first deal?
Uh, I would I would probably say partner in some way, shape, or form. And if it's not financially, partner with a realtor or a lender or a contractor, somebody who knows what they're doing. And even if it's just hiring them for their services, don't look at so much, hey, this agent's going to cost me 3% versus 2% versus, a discount broker that's going to cost me 1%. Go with an agent or a lender um, or a contractor, somebody who, or even a partner that's just done it and wants to bring you in on a deal, or you want to bring a partner in on a deal, because their experience and their knowledge of the market, of understanding what to do with flips, or any kind of deal, or whatever it is that you want to accomplish, partner with them in some way, shape, or form to do what they've already done, because they're gonna guide you in the right direction, and they're not gonna screw you over. And I wish I had done that myself the first time, but I didn't. It worked out for me. I'm also unique in that I was an agent, and once I did my first flip, I was able to make sure I had a lot of margin, and I really understood the market. But I've definitely made mistakes a lot along the way. I've lost money on deals along the way, and a lot of it could have been prevented had I partnered with somebody and had that second set of eyes with experience to tell me yes, no, or maybe you should do this, maybe you shouldn't.
Gervon, that's the absolute best advice you could give a new real estate investor. I tell people all the time, do not go about this business by yourself, right? So when you
Mhm.
say, joint venture or partner with someone, what would that partnership look like as far as a business arrangement?
Well, if you go the route of partnership in terms of a joint venture, obviously you're going to have to give up some piece of the pie, some portion of the profit, whether it's 50-50, 60-40, 25-75, whatever you arrange, depending on the numbers and everything, and what you agree to. It's really up to you guys, and how I think every individual does it. If you partner with, and let's say a realtor, and what I mean by that is, hey, you guarantee a realtor that to help you walk you through the process. That way, from buy all the way to sell, if it's a flip, understand that you're gonna, or maybe even be willing to sign a listing agreement for that property for an extended period of time, so you can lock in that realtor's knowledge and experience. And yeah, you may not be getting a discount, but would you rather give up, or would you rather get a percentage or two back on the back end, or would you rather have somebody that's knowledgeable, has your best interest in mind, and is extremely good at their job to be able to do so, or to be able to get the job done and walk away with a profit and gain invaluable experience and advice? Same thing with contractors. If you can partner with a contractor, maybe partnering is just hiring them for their services, and you're not sitting there trying to nickel and dime them to get every single penny down as possible, because everybody wants to focus on getting the best deal. Well, it's not always about getting the best deal. It's about relationships. It's about doing things the right way, and it's about having integrity, and it's about really just getting the experience to be able to continually do this and gain momentum and create a profitable business for you in your future.
Very wise advice, Gervon. One more time, how can people connect with you?
Well, you have my websites. My personal investment real website is thegqhometeam.com. My team website is gqhometeam, as in Washington.com. And then Instagram and Twitter, very easy. The unique name, so just at Gervon Simon, GervonSimon. Very active on Instagram, relatively active on Twitter. And yeah, reach out. I'd love to connect and collaborate and help anybody who's looking to start their real estate investing journey.
That's fantastic. Well, Gervon, final thoughts.
Final thoughts. Couple sayings that I like to live by: buy real estate and wait. Don't wait to buy real estate. That's number one. Another one I like to say is, you can never make another dollar from a house that you sell. So if you ever sell a house, make sure you have a strategic purpose for doing so, whether it be a 1031 exchange, whether it's the fact that it wouldn't be profitable as a rental, and you're going to take every dollar and then reinvest it into another deal or another property that will eventually create cash flow for you. And the last thing I'll say is that the wealth gap is widening. And the number one way to be a part of on the winning side is really to own real estate and collect assets. I believe real estate is the superior asset in America over stocks and over any other asset. And so if you want to be on the winning side, I believe that you should jump headfirst into real estate and hold on to your properties.
Well, and what you're saying there, Gervon, is the long term is always more important than the short term, right?
1000%.
And so you're a big advocate of not killing the golden goose, right?
Absolutely.
You want to keep the gold eggs. Well, it's been fantastic to have you here on the show, Gervon. Thank you so much for sharing with me and everyone.
Absolutely. My pleasure. Thank you for having me. And yeah, I look forward to staying in touch and seeing how our careers go.
All right, let's do it. Well, there you have it. That's another show. Thank you so much for tuning in and listening. I'm Jay Conner, the Private Money Authority. We always really, really appreciate you liking, sharing, subscribing, rating, reviewing. If you're having to be watching on YouTube, be sure and tap the bell, ring that bell so you don't miss out on any future episodes when we go live. So here's to taking your business to the next level, and we'll see you right here on the next show. All right, Gervon, that was fantastic. Thank you for joining me.
Thank you for having me. I appreciate it.
Absolutely. So yeah, stay in touch. Sharub, I'm happy with the intro that I did at the very beginning. So